Hello, welcome to LedgerCast. My name is Brian Krogsgaard here with Josh Olswich. Josh, how you doing?
Good, Mr. Brian. How are you?
Doing well. Happy to be here with you. It is a tough time in the market, but we're here.
Let's talk about the weather first. Is it
Uh,
hot down there? Is it humid down there?
Isn't talking about the weather what you're not supposed to do?
Look, man, it's our podcast. I don't care. Because it's hotter than hell up here where I'm at.
It is hot. It's always hot in Alabama in the summer, though.
Fair enough. Give me some good news. We got to start with good news at the very least.
Have to start with good news. I'm going on a vacation soon. How about that?
Okay. Love it.
That's good news for me.
Love it.
Not every company in crypto is insolvent. That's good
okay.
news.
That's a start. Silver linings.
Something. It's something.
Not every company has money with 3AC.
Oh my gosh. It seemed like almost every other one did. Pretty incredible, in fact. But
yeah, we still don't know, right? Like I saw the block put something behind a paywall out just now or today about it, and yeah, I mean, I kind of feel the same way about the Terra stuff that I do about 3AC. It's like, let's get it over with, get it all out there, and let's move on, But we can't move on because we're still trying to get money back for them, apparently.
I mean, we really have been seeing what contagion looks like. These are related.
Yeah, we had that Genesis news.
What was the Genesis news?
That they were in trouble to the tune of hundreds of millions, allegedly.
Well, they maybe have took a loss, but they have a backstop. They've got a Barry backstop. So it's right. It's a little different.
It's different. They're not, but it's fear. It's definitely contagion if they're affected in a big way, because Genesis touches. You thought 3AC touched everybody as I'm slurring my words.
Yeah.
Genesis literally is everybody. Miners, exchanges.
Yeah, they're everywhere. And they're more like BlockFi advertised to retail, right? They borrow from retail and they lend to institutions. And Genesis is largely sophisticated traders, institutions, funds, whatever, on both sides of it, right? I don't know that the Genesis advertises a retail product, but they have a lot of money that moves around, a lot of OTC trading and lending and borrowing and whatnot. And I think they're fine, but I'm sure internally it's like, hey, we gotta take a look at this. Arthur Hayes wrote a fantastic article. He's a great writer. His article, though, expresses like, how do you get here? And one of the things he clarified that I thought was worthwhile was the lending market was very competitive. So the terms over time are more in favor of the borrower, because the lender needs to provide this yield to the people that deposit assets. So let's use BlockFi as our example. And I'm sorry for my Slack messages. Hopefully y'all aren't hearing that. So let's take BlockFi, for example. They make they say 6% interest on BTC. Well, the way to get that 6% interest is to earn more than 6% for the people they lend to. And those markets get more and more competitive. So that's why some of these lenders didn't require collateral at all, because it's like, well, I'll just walk, or they have worse collateral or whatever, So Arthur made the good point of, similar to banks needing to supply mortgages to earn yield, and it turns into the great financial crisis, like same concept, but in lending coins to provide yield to people who deposit coins to earn yield. That's how it gets unhealthy. So you have to rein that back in. And to Arthur's point, he said this was a predictable outcome.
That was the thing. Anybody who was paying attention, of which there were plenty of people paying attention, they knew that these yields were not sustainable. Obviously, they knew that a lot of these yields were probably tied to Terra and Anchor because they were so high. Where else are you going to get yields at plus 10, plus 15,
Do you know what really broke the industry though? What really caused this bear market?
You tell me.
It was the GBTC premium going away and turning into a discount.
Yeah, that's where it started, but that's years back, right?
Yeah, but that like put the fracture in for yield, like the yield that people were using to leverage up. That it certainly affected 3AC dramatically. Now that didn't make Terra Luna blow up, but
Well, it affected BlockFi dramatically.
it affected BlockFi dramatically. It affected 3AC's ARB play and other people's ARB plays dramatically, and then combined with Terra Luna, that's what, like, Terra Luna became such a good trade. This is another point Arthur made in his article. It became such a good trade for the, borrow USD, deposit UST, and earn 20%, and it's worth paying 8% to earn 20%. So in combination, they went to that trade, they went to that arbitrage play because the GBTC one disappeared. So and maybe ignored the risk profile because it was such a carry trade. That's what I was looking for there. So
Yeah, what everybody did in that regard made sense.
right.
Assuming no risk, assuming a bull market forever,
Yeah.
But the music stopped,
The music
and
stopped.
there was
Arthur made a
not
lot of good points in that article.
there was not enough liquidity. I'll have to read it. I saw it get posted. I haven't had a chance to read it yet.
Yeah.
The other thing too, Nansen put out a great article about the staked ETH connection to the Terra Luna stuff, and how the staked ETH market rate started to wobble because of the Terra blow up and the related Beth, or I guess people were taking Steth and then bridging it onto Anchor somehow, or bridging it onto Terra. I'm doing a terrible job explaining this, but well, that's how, like, we knew this because of the Celsius stuff. I think Celsius was doing this, and they got out like just barely, but
and then they didn't.
right. Everybody's using the same products to get the same yield, which is attracting a ton of people because the yields are so high, unsustainably high, ponzonomically high, right? It's just yeah, but in the moment, in the time, we have an episode even before, like, the week before Terra collapsed. We talked about, like, make sure you have a plan if UST goes below X, like 95 cents or 90 cents, like, make sure you have a plan, you know what you're going to do. And people knew this all along, the smart ones, the ones who ignored the risks, like a few of these hedge funds who just assumed it was like good times forever. They kept buying UST on the way down, and only blew up even harder. I don't know where I'm going with all this, but everybody's connected. Everybody's doing the same stupid bullshit.
And then and then when the music stops, it stops for everyone at the same time, and it's truly musical chairs. Like who's left without a seat? Jay Zay said in the chat, first time chat too, by the way. Welcome, Jay. Amazing that they didn't pay the few percent to insure the UST. I didn't even know that was a thing. Now, what I did know was possible, and I'm surprised wasn't done more, and maybe it's because he couldn't do it with size, was don't borrow USD to buy UST. Deposit USD and borrow UST, because if UST collapses, it's very easy to repay. But I don't know that was like something that could be done in size because of the risks. Like who wants to actually make that be the other side of that trade?
Well, I want to know why are we using GBTC as collateral when it's illiquid?
I think that was BlockFi's biggest sin.
Well, that's not just BlockFi, that's everybody. Apparently, allegedly, Genesis was doing this as well, amongst others, in regards to 3AC, who was potentially double or triple booking their collateral. Like,
yeah,
all people had to do, somebody made this comment in another chat of mine, like, all people had to do was get on the phone together, like a 10-person Zoom call or whatever. It would have been so obvious. Well,
Kyle Samani said that. I don't think that's realistic. I mean, they do talk more, but it's hard to say, like, which actual shares of GBTC are you guys using as collateral?
Yeah, and you don't want to expose your client, obviously, but
right. It does make it hard to collaborate, and that's
well, when I was doing DD due diligence on these lenders, I'll ask them like, okay, like who are your counterparties, and they're never going to tell you.
Right.
But most of the time, Genesis is listed everywhere because everybody knows like they're the biggest game in town. So yeah, everybody touches back full circle back to Genesis. Everybody touches Genesis.
Yeah.
Any other good news? Any other good news? But the Ethereum hard fork, which I didn't even know was happening regarding the Ice Age, whatever, got pushed back, right? That was successful, painless.
I didn't know that was a thing.
Okay. It happened.
Here's
They
some good
delayed.
news.
They delayed the Ice Age.
SARGZ said, "You guys saved me in that episode from Wrecked City on Luna and UST." So I guess we talked about the potential concerns with it ahead of time, and good for us.
Yeah, but it's hard
good for
to.
you, Sarge.
I had these conversations with people offline like a month or so before, and it's hard to convince people when all they see is things going to infinity. It's hard to convince them, hey, like you got to be careful. There's a massive potential of things blowing up very quickly here. It's hard. It's hard for people to take that in seriously.
Mm-hmm.
Same thing with not your keys, not your coins. It's like, come on, guys. I don't want to go over that again, but I hope people come away from this and they learn. They take their lumps and they use this tuition to learn how to do it better next time.
Yeah, hope so. You got this Adam and Eve drawn. I don't know any other good news. Here's good news.
What about, well, somebody mentioned, Sam is buying the universe. Is that good? I guess in the near term, it's good. I don't know about long term.
Here, that I don't think BlockFi was totally insolvent, but they were definitely had a run on the bank, and the world doesn't have the same protections that real banks do. Our world doesn't. So their customers are going to be able to continue to perform that run on the bank, and they keep their funds, like they come first. So I think that's a good thing in terms of what FTX is doing. Yeah. So,
but it comes back to the same issues with the GBTC illiquidity, the staked ETH illiquidity. Like in a bull market, it's fine, right? We can get in and out. There's liquidity, but when there's a bank run and there isn't liquidity, that's it. There's no bailout. There's no backstop.
Right. That was something earlier when you were talking about, all these other people using GBTC. I think one of the reasons that's the case, like why they let that happen, is because it's easy in a bull market to say, oh, well, there's all this OTC demand for GBTC. Even if it's $300 million, we can offload it. And then when you realize this is a problem, there is only an offer. Like there's no bid on the other side of that trade. The book is not orderly in times of chaos. So it's too easy to do this in hindsight, but in your due diligence, you're not always accounting for what do we do when it's not an orderly market. I think that's how some of those things get approved. Did you know we could just overlay the chat entirely?
I did not know that.
Seems dangerous, but I did it.
That is very dangerous. Yeah, so we closed below the 200-week moving average for the first time ever on BTC, which isn't great, but I'm kind of glad we can stop saying like this is the litmus test.
Yeah, I don't think this comment thing's going to last very long. Yeah, below the 200-week moving average. Sorry, commenters. Below the 200-week moving average. I mean, looking at this forever chart, right on the December 2017 high. It's either the most obvious bottom and, flip of the 200-week, or we are just waiting for this vacuum down another 50%, right?
Yeah, and we said this last episode probably, but the previous highs were blow off tops, and we had plenty of time to like dive into that moving average because the moving average was so far away by the time we started reversing. Whereas here we were basically flat for a year. I know it's like a 30K range, but we were flat for a year, which allowed the average to move up. And now that we're there, it's like we definitely have potential downside here. Like you're saying, to 12. Like 12 wouldn't surprise me. 400 ETH wouldn't surprise me either. Honestly, like that's where the levels are. You know, it kind of is what it is. When everybody sort of packs it up for other reasons than just this isn't a problem with Bitcoin or ETH. It's just like the macro environment obviously is really, really, really bad right now.
It's nasty.
It was the worst Q2 ever for BTC or ETH, and it was, or both of them. I can pull this up, but the
certainly BTC
quarterly breakdowns, super unusual to have 2 years in a row close negative. But yeah, it was the worst Q2 ever for BTC. I think it was the first red quarter for ETH. Yeah. So this,
you don't have,
that's unusual. Very unusual. These numbers might be slightly off.
But they're close.
Yeah.
So 2018, we had a 50% down quarter in Q1, and then it was flat for 2 quarters, and then another 40% in Q4. As much as I don't want that to happen, that seems like a possibility, right? Flat for a quarter and then do the death spiral at the end of the year.
Well, the entire framework is sort of dependent on what the Fed does, sadly.
Yeah.
We either decouple or we figure out what the Fed's going to do and try to skate to the puck or whatever before it gets there. Because Q3 historically is Garbo, along with Q1 historically on average. So does the Fed pivot happen soon or next year or before midterms? Like what's going to happen here? Does inflation just continue?
A significant pivot is already starting to be priced in the bond market futures curve. I don't know if you've seen that.
That I did hear as of today. Do you want to explain to people what that means?
Yeah, so I'm not going to explain it well, but I'll do it in my dumb way. The futures are indicating, whether it's like VIX futures or bonds or whatever else, they're indicating what the market believes about a period in time. So for instance, let's take volatility futures. The volatility futures for October, November spike up because the market's expecting more volatility around the time of an election in the US, which is in the first week of November. So there's a premium assigned to the futures at that time, and then it settles down. So the market can be rather smart in terms of like where it prices what risks, and what the market futures in bond markets and yields are pricing is that essentially the Fed will change their tune early next year. And therefore it can be pricing for tightening now and easing later. And that shows up in the variation of pricing, because the contango or backwardation that can occur between now and then in the future. So pricing in a pivot is a little scary, because Jack just mentioned this. It's a little bit of a setup in case the market is wrong. Like if they tighten longer, then the market has mispriced this future easing. So therefore, like if they tighten for longer, if they stick to the plan for longer and they're not cutting rates early next year, then it leads to more pain. So that could be troubling.
Gotcha. Yeah, I saw a bunch of noise about that this morning.
Yeah.
And it's also the worst. I think it's the worst first half for SPX ever. First half of the year.
Really? Not for SPX?
Yeah, I think so. I might be. It's the worst first half for something in Legacy. I don't remember exactly.
Feels like a Charlie tweet.
Charlie Biello. No, it wasn't.
Baleo. Is it Baleo?
I think it's Biello.
Biello. Oh, So the worst 60-40 portfolio.
Maybe I forget what worst it was, but like Legacy is just a dumpster fire right now, obviously. But yeah, in the near term, we could turn this ship around with this Adam and Eve that we started. We had this failed inverted head and shoulders that I traded and let go of, and yeah, I don't know. I feel like the loser idiot trying to long this every single time. It looks decent. Yeah, that's the tweet.
Yeah. Trading and then letting it go is something I've done a lot of. And it's very painful. Like the amount that you can get your total drawdown with paper cuts, and then sometimes it's a little bigger than a paper cut or whatever. It's rough.
Yeah, I mean, I'm not looking for infinity here. But even still, if you're wrong, it hurts. It hurts, Charlie. But yeah, this could Adam and Eve over the next week or two. I don't expect anything insane over the weekend because it's a long weekend in the US. It's a holiday on Monday, low liquidity. I don't know. But again, the TA, if the TA is worth its salt, that 200 week has to eventually either do something or just fail miserably.
Well, it could grind around it. I mean, but it's not it's telling you that you don't have to be in right now.
No, we didn't bounce aggressively back up, and that's the biggest worry for me. I don't care about closing it below it the first time ever. It's the fact that we're just here and nobody seems to care collectively.
Yeah, and the where you can go downwards from here is the scary part. Because there's just a big volume. There's a big volume gap. There's a price gap. There's a long way down there that I don't enjoy.
I'll pull up the DeFi chart in a second to illustrate that further, but go ahead.
In terms of not caring or downside or whatever, we talk about the dollar a ton. After maybe a fake breakup, this week is very, very strong for the dollar. Still on lower momentum if you're looking at RSI stuff, but it can do that for quite a while. So it can make multi-week new highs without a lot of momentum on it. But that's just massive dollar strength. And a lot can happen over the course of a couple of months in that arena. And it's just another headwind. It's just another headwind. At the same time, monthly close on S&P, really terrible.
Yeah, I mean, all this stuff. That's the crazy part. Like, it's all related to what 10 old white people have to say about rates, right?
Yeah.
They got us here.
A lot of headwinds.
They're dumping us here. I was going to say as well with the BTC, like, there's this yin and yang between the low time frame stuff and the high time frame stuff. It's hard to trade high time frame TA, I think, in the near term, as like if you're taking a leverage trade, right? It's much harder, I think, to make that work on leverage than spot. Like I can buy below the 200 and not worry if it goes to 10 on BTC, but obviously on leverage, that's not tenable. BTC is also in this downward channel, which isn't great. Ideally, you're not really taking longs until we're out of this thing. I mean, we're not anywhere near the top side of the daily cloud. If I can find that on my thing here, which is for me, the cloud is never wrong. I just choose to ignore it or choose to think that I know better. Like the cloud, look at this.
It told us out. It said, get out of here.
It said, get out at 40 and stay out and don't think about doing anything. Right. But I'm like, nah, I know better. That's a head and shoulders, right? Or that's a tweezer bottom. Or now I'm saying, oh, this is an Adam and Eve. I think it's reasonable to want to trade those patterns on low time frames with like low size, but yeah,
for the purpose of mean reversion.
Right. But we're nowhere near a bull trend, obviously, anytime soon. Nowhere near that. Like Jack was saying in the chat, like a lot of this stuff is threatening to retrace all the way back to its COVID levels. We look at like the DeFi stuff, just I'm sure people know, but you know.
Well, the individual assets have been doing it. So whether you're looking at DeFi or you're looking at like individual tech stocks, your PayPal's and Shopify's, whatever the ones that we've talked about.
Shopify, oh my God, yeah.
What he's talking about with the danger or the fear is, what if that happens with the index?
Right.
If the S&P does that, that's pure doom. That's another 40% from where it is currently. That's 55% off the top, which would be indicative of like what you may expect from a full-on recession.
Yeah. I mean, I don't think anybody's saying like that's crazy or that's unexpected, or if that happens, nobody warned me, you know. And if you pop on like the 2008 fractals or the previous recession fractals, like it makes total sense that we go down there based on previous market actions around recessions.
Mm-hmm.
And I think it's pretty conclusive that we are in a recession based on the data. I think everybody thinks we're in a recession, but now like the data, we've had 2 consecutive negative quarters in GDP.
What's the close of June and the actual shrinking GDP for the second quarter in a row?
I believe it was minus 1.2%. I don't know if
Yeah,
those numbers
I know
are...
it was negative. I just didn't know if it was the second or if it was the first, and now they're just assuming we'll have another.
I thought it was the second. I could be wrong.
Yeah, it's not good. It's definitely not good. When you look at this chart, it seems very logical. It's like, yeah, you know, go back.
I think a 50% retracement from the high to low is logical. I don't know about the full retracement. I mean, that would be... I'm not saying it's not possible. It's just...
55%. It's 55%. 50% would be the monthly body close bottom.
Okay.
And it might take that long for the 200 month to get there, whatever. That's basically also a retest of May, like that 2015. It was whatever they called it, peak earnings. It was like the earnings recession, 2015, 2016. If you just showed me, okay, 2 years from now, that's the chart, I would believe you. It's fine. It's totally reasonable. Not comfortable, but reasonable.
Yeah.
And what does Bitcoin do in that scenario?
I think ultimately everybody assumes it's going lower. Both
Bitcoin,
both legacy and crypto. We haven't seen it. Again, it has to decouple. It just hasn't done that. People are trading it as though it's just another legacy, you know, risk on thing. Plus, it's the most liquid. You know, if there's some bad news, any time of day, any day of the year,
you
can
see it in
sell
Bitcoin immediately.
Yeah, you can sell, you can buy, you can do whatever you want. Anybody can. You know, it's not like a house where if you get in trouble on an illiquid asset, you know, you're kind of stuck with it and you have to deal with the consequences. But like if you need to shore up your book or you have expenses, you know, crypto is going to be the first thing you can sell because you can. And somebody was asking about the weekly cloud. We are very far away from the weekly cloud. We it's reminiscent of 2014, 2015, 2018, 2019. You know, we might be very far away from those averages, the TK lines, but those typically take like a year, you know, to return to.
Mm-hmm.
And it's been not a year.
We continue to not be in a hurry to be buyers. At the same time, like, I don't know about you, I am consistently tempted to snag some like bottom that's going to be highly tradable for significance. I don't know what's wrong with me.
Well, you look at stuff like this and it's like, okay, is this MVRV? Is this just hopium? Or is this like...
No, I think it's real, but it could go sideways for a long time too in the green.
Exactly. This behaved this way before this metric even existed, publicly anyway. So I do have faith that it. I have faith. I have hopium, copium.
Can you explain? Like, this is just a chart, but what is the MVRV score attempting to do?
Yes, it's attempting to tell you overbought, oversold, based on historic levels. So if you look at the realized cap, that's an average of all the coins that have moved, and it
Mm,
just gives them a market cap or a realized cap, gives them a cap.
gotcha.
uh, and basically, it's saying if market cap is below the value that all of the coins have moved on average, then I read that as there's very little like unrealized profit left. There's no juice left to squeeze in this thing for on average, because all these coins were likely bought above the current value. So if you look at UTXOs in profit versus in losses, most UTXOs, I think, at this point are underwater.
Mm.
So the people left to capitulate are people who are like severely underwater or going to be severely underwater theoretically, versus people who are just eating it and don't care.
Yeah.
I think that's ultimately why this has been successful over time.
So one of the questions has been who's left who could capitulate and cause problems. And the big group that has been rumbled about has been miners.
Before we get to
Which,
that, did you
yeah,
see the price of ETH stakers? Did you see this?
no.
Let me try to pull this up.
Is it really bad?
It's a great chart. I think it's from Parsec. I don't have an account with them, but ETH stakers by entry price.
Ouch.
Yeah, I think a lot of this is that staked ETH trade. I think that's what fueled this, at least.
Mm-hmm.
Partially, that's in here somewhere, because you got this like binomial thing. You got like this wide area between 1,000 and 4,500, and then you got all these like true believers at like
Just make you
sub
think we're going to 500 looking at that.
sub 1,000.
$500 ETH, and I think I'm figuring out how can I possibly get money into this market, and I just YOLO, failed experiment or riches.
I've had several people say they would go broke buying ETH down there,
Yeah,
because that's how confident they are.
yeah, I think I would too. Count me in.
You were talking about miners.
Mm-hmm.
This goes back to Genesis as well, because if lenders are calling back their loans and saying, hey, we need to shore up our books, whatever else is going on, if they're calling back their loans and miners are then forced to sell collateral or sell assets, whatever, to pay that back before they thought they would have to pay that back in full, then that's also going to have a bearish effect on the market, right? Because
Yes.
it creates a forced selling event. Nobody wants to be a forced seller.
Yeah, so there's different types of minor capitulation. One is their own lending and borrowing is interrupted, whatever their strategy was. Like, assuming most of those are probably more healthy strategies, not like mega leverage or anything. But if those loans get called, they're these perpetual lines of interest that are lines of credit that when they get called, it just causes problems with whatever your business strategy is. Most of these are real business strategies that they're only speculating on Bitcoin so much. They may hold Bitcoin and not sell it, but they're mostly doing what they do for cash flow reasons and whatnot. The next big thing that becomes a risk is when you are not getting enough reward from your Bitcoin because the price is too low and the hash rate competition is too strong, then your mining just becomes unprofitable. And that's caused capitulation in the past multiple times. And that's kind of the next shoe to drop, right?
Right. And we've had this divergence between hash rate and price. Hash rate has continued to go to like mega moon territory.
Which it also did in 2018.
Yeah. Its hash rate has slowed down. ETH has lost like 15% of its hash rate, by the way. I'll pull that up.
Well, it's
but
gone to proof of stake. So
yeah. Where was I going with this? Hash rate, miners. Yeah, so a lot of these miners are definitely, either underwater profitability wise or are making a lot less than they were, so they have to make that decision, like, do we mine at a loss, or can we mine at a loss based on overhead? Can we take out like debt financing? I don't know, like this. It's hard when your collateral is basically like 80% variability range, like
Yeah.
not only are people calling back loans on them, but the collateral is shrinking in value if they've taken out loans in BTC. Like it's just really bad for them
Yeah.
right now. And then
So
you've got
moves lower could cause capitulation there, where they are forced to make a change, whereas right now they're maybe weighing their options.
Right. And you've got some miners who are also dealing with like weather events in Texas or in Montana, Marathon, at the worst possible time, because they need to be mining right now if they are able to, not like dealing with, can this hardware turn on? Do we have power? Like
Right.
this is the worst time for them. So hash rate on BTC is actually fairly stabilized here, which is kind of surprising. Because we haven't. This is another thing to watch if you're looking for like bottom things, is a massive negative difficulty adjustment.
Yeah.
And we have not seen that anywhere close to that yet on hash rate. But on ETH,
ETH is going down, you said? Yeah. Oh, yeah. Look at that. Cute.
ETH is...
but ETH is also going proof of stake, so you'd kind of expect hash rate to start falling off.
I agree, 100%. But that's a lot for ETH to fall off. That's 15% or more.
Yeah. I wonder if that hash rate's going to go anywhere else, or if all those GPUs are just going to hit the market.
I like to think something's going to happen. Like, don't you think some miners are just going to say, we're going to fork this and make it ETH whatever classic? I don't know.
ETH POW.
ETH POW. Yeah, there you go. Like, somebody's going to try that, right?
Sure. Oh, yeah. Somebody is, for sure. And it'll probably fail miserably. Storm says ETH classic, but no, you always, the first lesson of Ponzi is you need new Ponzis. Old Ponzis are not good enough. Logical solutions are not good enough. You need new shiny Ponzis. All right, so I wanted to share this ETH monthly chart because it cracks me up. Again, total.
If you take away the name, I'd say that's going back to its floor, right?
All the way to the floor, $200.
I don't care what the price is. I don't care what the asset is.
The difference between like 2 and 500 is very, and when you're in linear, and I love showing things in linear at this time of the market, so I hope you'll forgive me. I'll look ahead at basically there. So the $1,000 line, 350, but let's bump that up to 500 because that's the price we're talking about. Like the difference between 250 and 500 on a linear basis, you don't see much difference, It's just somewhere in that channel down there. But it's right there at the old high.
I don't have any reason other than it should that crypto needs to turn around here. Like there's no macro headwind. There's nothing fancy happening anytime soon. There's still plenty of on-chain activity with all this stuff. DEX volumes are still basically month over month where they were. NFT volumes are picking up based on what I can see. It's not like everyone's leaving everywhere. It's just a lot of people are selling.
I think if we had, this was our DCA batch of lines.
It's not bad.
Yeah. If we didn't have the macro problems, I think we'd be V-bottoming here, not grinding and like trying to find where can we bottom.
Yeah, if we didn't have macro issues, we wouldn't be down here, to be frank,
Or we might have gotten there, but it would have been an unwind and then go, I think we would bottom faster. But this is,
I mean, that was what, 12 red weeks on ETH? 11? Like that's not,
and then there's no
normal.
There's no real positive response to it. It's just like 12 weeks of red, one puny little week and then continue the pain. And maybe we continue the pain, but it's like slow. I don't know.
Well, we're swinging the pendulum more and more into oversold, like based on metrics, right? Like we can stay oversold for a year on RSI, on MACD, on MVRV, on whatever else.
I mean, people belittle some of these simple tools like RSI. I actually kind of like them on the big time frames because you look at when did it actually hit oversold territory, and it was always a good time to buy. You know, it is at least it's telling you with certainty that it's very, very oversold. It's not telling you it can't go down another 50%. It's just telling you the market is in a highly depressed and oversold state. And if there's a bounce, there's room for a significant one.
Yeah, I mean, I agree. I mean, there's also people, including myself, who are still dealing with taxes and cannot purchase the amount of crypto they would otherwise be purchasing.
Yeah, I've been trying to figure out to affirm what is my actual liability for 6 months now. And the variation on what it could be, like I set aside a significant amount, but the variation on what it could be is so extreme that like my buying power changes drastically.
Right. I'm the same. I got a firm value. I had a firm conclusion to it, but what I had set aside was not what the liability was. So
yeah. And it makes it very difficult.
And that's just the reality. You know, I don't want to talk about taxes and bore people, but that's what I'm dealing with currently, you know?
It affects your buying power significantly.
Yeah.
Most people shouldn't have too big of problems there if you plug into, your token tax and whatnot. If you were doing like I did a lot of cross-chain stuff, a lot of on-chain stuff, and the cross-chain where you also had coins go to and from exchanges to chains and then multi-chains and then bridging chains, complete and utter disaster. Mine was just a complete and utter disaster. And I'm trying very hard to do it right and to pay the right amount, to track everything properly. And it is not easy. It has not been easy.
Yeah. So there's that. There's also inflation. That's the elephant in the room.
Yeah. Well, I think we already hit peak inflation.
You think so?
Yep.
Did you see rents higher, all-time high? You don't care?
Nope.
You don't think that's part of the inflation print?
Yes, I do. But I also think we've probably peaked. I think that the demand destruction in the market currently is severe. Like severe.
Based on what? Consumer confidence?
And housing starts and inventories in stores, and like people are still buying gas and stuff because they have to, but we are trying to eliminate inflation by eliminating people's ability to buy things because by preventing them from having a job. Kill jobs, kill demand to try to kill inflation. So we're just creating a stagflationary environment. I think we could have sustained high inflation, but say it's at 8 or 9%, something like that. I think, sure, we can be long-term 5, 6% for years, but we're doing it currently by just like smash everyone's ability to make money, which is creating a more deflationary environment. And I think like the things that are left are the things that are just, they have natural pressures that are hard to ease. So your oil is still expensive. Your food is still expensive because fertilizer tripled in price because of Ukraine, and wheat doubled in price because of wars and other things. It's not just wars, but the wars having an impact. Printing money also had an impact. So we're eliminating your purchasing power to buy meme stocks or TVs, but you're still going to spend a lot of money on your groceries. You know what I mean?
Yeah. I also saw the argument that we can't raise rates too high because the payments on our own
We
debt
can't play it. We can't pay it. We're going to have to MMT
are
it. We're going to have to
yeah.
print $1 trillion coins and say, here you go, self.
The
Here's
other
your debt payment.
thing with destroying markets is tax revenues shrink. So then, that gap
Yeah.
widens even more. It's compounding in a way because you're collecting less in taxes and you're increasing your debt payments. So ideally, like theoretically, you can only go so far before things start to break completely.
Yeah, I think the dollar milkshake theory is very real, and it's finally playing out. They were wrong for a long time. Are you familiar with that?
I've heard many people, including yourself, talk about it frequently, but I don't know. I couldn't give you a sentence as far as what it is.
The collapse of the dollar is preceded by extreme dollar strength.
Okay,
Is
yeah,
in a TLDR.
right. Because the flight to safety is the DXY, the dollar,
Is
or
to the
whatever.
dollar, but the strength of the dollar puts so much stress on the underlying system that it leads to the collapse of the dollar.
Right.
Brent Johnson, and then another guy, Luke Groman. A couple people to listen to if you want. Problem is, these are like decade-long trends. Just Google dollar milkshake, you'll find it. It's pretty good stuff. That's, in my opinion, that's extremely, 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 extremely bullish Bitcoin in the long term.
Right.
Problem
After
is,
it happens.
problem is like, is your Bitcoin, is your best Bitcoin price like 20K, 10K, 6K, 3K? Who freaking knows? What kind of disaster are you going to create first? But on the back end of it, your fiat currencies get absolutely smoked. And it won't be just the dollar, by the way. It'll be lots of things. Like your real buying power with fiat is in big trouble. And the desire for real assets increases dramatically.
Yeah, I mean that started to get talked about with the Ukraine Russia sanctions, and this idea that a nation state could just say, nope, you can't have these reserves anymore. We saw it play out finally the first time, like over the past week. Russia has said, we didn't default on our debt, it's there, we just can't access it, right?
Yeah.
I don't know how that actually ended up playing out. I think they said we're just going to pay it in rubles.
Yeah. They haven't done that in like 100-something years or more. It's ridiculous. I don't even know.
Right.
There's big fractures happening right now.
Yeah.
Jack said that's why big money is buying real estate. I hope he's right. I'm buying real estate too. That was my primary diversification method. And I can't control where I buy real estate, because I'm not going to go buy real estate in some place that whoever I think is going to come out strong. So I'm still at risk of my sovereign state. But I do think, like, relative to fiat, real estate will be a great place to hold wealth. I think Bitcoin will be a great place to hold wealth. Maybe even Ethereum.
Yeah, I mean, if we can get through some sort of ultimate bear low with Ethereum's merge, like after that, man, like imagine trading ETH from like 500 to 3,000 again.
Yeah. T-less real estate's going to nuke in half within 6 months to a year. There's different types of real estate, for one. And then also...
Yeah, okay, so get educated, okay?
Yeah. And, well, there's a big difference between residential and commercial real estate. Also, what could very well happen is you have a reduction in liquidity in real estate, but not actually prices for a while. And then another thing is the interest rate dynamic can definitely have an impact on valuation, but it's not necessarily as big of an impact as you would imagine. because there's still people that will be willing to buy those distressed assets. So you could have a scenario where people still want to own it, but some of the stuff that gets on the market is forced on the market because of interest rate issues. But then that dip gets bought up. Basically, it's not it's 2008 PTSD to think 40-50% corrections in real estate markets, especially commercial markets, in my opinion.
Well, you've got rates rising. You've got asset values of houses.
Yeah, I mean, I was just doing the math. I was just doing the math with some coworkers and friends the other day. Like, I don't remember what it was, but let's say you have a $400,000 mortgage, and the difference between rates 6 months ago and rates today, your monthly payment could be $500-$600 different. So maybe your monthly payment's not different, but in terms of putting the house on the market, the people who can now afford that monthly payment, that group of people is different, unless they're making that much more money, like 20-25% difference on the actual monthly payment. So it makes their buying power go down. So it doesn't, but I still think there's opportunities for real estate to, one, be strong, and two, come out strong.
I hope
personally. So. I could be totally wrong. I could be very sad in a year or two.
I mean, my real hope is that everything crashes so I can get in. So I was like, oh, real estate is not going to go to infinity. And you know what's going to end up happening is it's going to crash to where I should have bought in the first place anyway, and I'm going to net zero. Like, it's not even going to matter. So that's my sob story for you.
Yeah. I have a lot of thoughts on real estate. I've been doing a very, very deep dive the same way I did on web stuff and then crypto after that. Now real estate as a way to learn something new.
Is that your next pivot? Is there going to be a real estate podcast in your future?
I don't think so, but I think real estate can create wealth, but it's a really, really great way to preserve wealth and create cash flow. And I want to do both. I want to create wealth and preserve wealth and create cash flow. So that's been my goal.
So here's the plan, chat. We just buy houses now, borrow against it to buy even 400, and then it goes to infinity, and you make all your money back, right?
Yeah, that's another thing. I think if you can buy real estate in all cash or have very long-term locked-in rates, then that's going to put you in a much better position of strength with real estate to earn income on it.
And I think on that note, we have to leave it there. Yeah. You know, it's a bear market because we're talking about freaking real estate.
It's a fun industry. I think you learn a lot about crypto when you learn about real estate. Because it's investing, it's just slower.
But yeah. Anyway. Slower and more illiquid.
Yeah. Thanks for joining us, everybody. Sorry for boring you. It's a bear market. What do you expect? Talk to you later. Follow Josh at Carpe Noctem. Bye-bye. Go to flip.xyz and sign up. Use it. Sign in with MetaMask. Buy. Explore NFTs. See you later. The easy river has just run dry. In a house of cards, I feel the breeze. Wound so tight, I can barely breathe. Oh, the chains, Lord, the chains, come release me from